A very special guest now. Peter Brandon, founder and CEO of Factor LLC, is now with us. Peter, thanks so much for taking out time for us. Can you just talk to us about the pace at which global equities have corrected? The sort of correction that you've seen has been unprecedented. What have you made of this global crash so far, and how worse can it get for global equities even from here on?
I have a trading career that goes all the way back to 1974. So, I'm a 46-year veteran of speculative markets, and this is the wildest time across all kinds of market categories that I've witnessed. It's really pretty nuts. There were some markets that have not surprised me. There are some that have surprised me. The volatility is extremely difficult, but I'm not sure we're out of the woods yet. I see the possibility that the S&P can have a bit of a rally if the U.S. Congress can straighten out what it's going to decide to do to throw money at this issue. I think it needs more than money, but should we get a resolve out of Congress, there's a chance that we could see. And I'll glance down to my charts here for a minute. It's not that I don't want to have eye contact with you or your audience, but there's a chance that perhaps we can see the S&Ps bounce back up to 2650 or so. But we're not out of the woods with COVID-19. As a matter of fact, we won't even peak in New York City for another 2 to 3 weeks. So then I could see the S&Ps dropping back and possibly even breaking below 2,000. And that would probably then end up being the capitulation of the move down.
What are long-term charts telling you now, especially for the US markets and the Indian markets?
Well, Nifty is a really interesting one because Nifty is the Nifty 50 is a chart that I have really talked considerably about in the past. In the past year or so, thinking that the Nifty was topping out up in that 11 to 12,000 area. I got a lot of grief for talking about the Nifty having a major correction. I'm not surprised with the Nifty. There were some things that happened on the chart that really were quite clear in the Nifty. I really felt the Nifty had a decline to 9,000, which we've clearly had. I also have talked about the Nifty going back to 6,400, and I've been scolded on social media for even suggesting such an insane idea. But we've almost gotten back there, and I think we'll still get back there. So for now, I think the Nifty is going to work itself lower. It might have a rally back to 9,600, but for me, that would be a shorting opportunity. I see the Nifty dropping lower. Mainly because I think the big bull market in the Nifty that started 20 years ago topped out here in 2019. So we're going to undergo a couple of years of bearish trends in India across the board. The U.S., really long-term charts in the U.S. are teetering still on an uptrend, but that uptrend is under attack. I think that we're in here for perhaps as much as a year of big, choppy, swinging trading ranges in the U.S. market that will tend to take prices lower.
Peter, gold is traditionally looked upon as a hedge, as a safe haven. Initially, it did show signs of moving up, but then it eventually gave way. Right now, of course, we are at 1,600, but don't forget we were below 1,500 as well just about last week. So what's your view on the yellow metal going forward?
I think gold goes to 1,780. I'm not sure how it gets there. I thought it might be a rather smooth ride to get there. At least with some ups and downs that were pretty dramatic, but tending to move higher. I still think we've got 1780 in the target. Beyond that, probably all-time highs, so somewhere up in the 2000 level, and beyond that, probably 2600. I just haven't expected these wild 100, 150 dollar swings to get there. It's extremely volatile. there's other things going on. I mean, there's the price differential between bullion for spot delivery now in the physicals market and the futures markets has gotten out to really an all-time high premium for physicals. The physical gold is in short supply now for a couple of different reasons. You've got some processors that have shut down or curtailed based on the global virus and so forth. But those things do get straightened out over time. But nevertheless, I think the upward pressure in gold will continue. I sure wish it was less volatile to get there, because then it would be a better trading market for me. But in the meanwhile, higher prices in gold, which would be very consistent with the tendency for gold to go up when we see major stock market corrections, or even worse, tremendous bear markets in stocks. Of course, gold will double or even triple in price. But so I do see gold working higher. I like the gold market.
All right, Peter, really appreciate you giving us your time. Thanks so much for sharing your take on what we could see from the equity markets, gold as well, going forward.